For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. All right, all my New York City Traders Expo guys, you have been looking at these opening gaps for a couple days. If you've been in the room, if you haven't been in the room, shame on you. It's free for a month. You've got access to all sorts of great stuff free for a month. It's actually a very valuable service that you've been permissioned into. I highly suggest you look at everything for the next month. It's a better deal than you're getting from anybody else, I guarantee you that. So if you are in the trading pit every morning, then today you should have seen Abercroimbie and Fitch pop up on our list of stocks that made opening gaps. So there's a couple ways you could look at this one. I don't like to interfere too much with what's going on in the room. I like you guys to run the room. It's your room, not my room, but I'm going to pop in there tomorrow and see if I can clear up a couple things. In the meantime, ANF, I had some questions about this one as an opening gap. It was a 2 standard deviation opening gap, and yes, indeed, it did make the move lower on the second 5-minute bar of trading. And if you were paying attention in New York, then you know that what I said was the deepest bar in the opening gap is always going to be the one that you want to get your entry based on. And in this case, 5-minute bar number 1 is the deepest bar that has a low of $30.60, so $30.55 is a suitable entry. In the second bar of trading, that's the one that violates that low. So you get down below that 30.60 low. You've got a high in the second bar of trading of $30.80, so that gives you about a $30.85 stop loss. Now you've got your stop in place, you've got your entry in place, and when that second bar trades down through the low of the first bar of trading, your next question is, where do I put my profit objective? So those of you who were paying particular attention to the Fibonacci price expansion part of the presentation that I did, you know that you take the high down to the low of that first bar of trading. In this case, that gives you a target down about $30.15. So you've got a 40-cent per share target on this one right out of the gate with an extension down to $30.05. And then the other thing that you should be looking at are these pivot lines, and you can see here that the pivots give you a target down $29.78 and then $29.56. So you had lots of opportunities to extend the profit objective. You had a great entry on this one, and by paying attention to the cues that the market gave you in the form of the Fibonacci price expansions and the floor trader pivot lines, you had the opportunity to lock in some really good gains on Abercroimbie and Fitch. Move to the first logical target on this one handed you about $400. The move to the profit extension on this one turned a 1,000 share trade into a $1,000 winner. So that's it. I want to thank you again for coming to my session at the Traders Expo. If you have any questions, shoot me an email, adrian@traderinsight.com. It's the best trader education anywhere, only from traderinsight.com.